Hey guys, this is Andrew from Dividend Growth Masters. Now today I want to talk about a very interesting strategy that dividend investors can use to boost their passive income. Part of the reason to be a dividend investor is just the passive income streams that you get from all your dividend payments every month or every quarter when you receive them. So this is a strategy I learned a few years ago, and it really came to my attention when I noticed a few of the stocks in my portfolio were trading a little bit flat, and I was wondering if there's any way to increase that income. So this was one of the stocks that I held at the time. The stock has since surged a little bit, but if you look at the chart for Activision Blizzard, ticker symbol ATVI, the stock was pretty flat. It traded between about $10.50 to $12 per share between 2009 and 2013. So for about a 4-year period, the stock was pretty flat, and I actually held that stock for most of that time in my portfolio. So what the covered call strategy is you're basically selling a call option and earning a premium from selling the option. So a call option gives the buyer the option to purchase the stock at a predetermined price. So when you're selling the option, you are basically selling that right. That's why you're in a premium from the option sale. So if the stock price surges, then the option holder will exercise his or her rights, and you may have to sell that stock to him or her at that predetermined price. But if the stock is pretty flat or declines a little bit, you can earn the premium and the option won't be exercised. So this strategy is really best preserved for stocks you think are going to be flat. And if you have any stocks in your portfolio that have been trading pretty flatly and you don't think the stock is going to move in the next few months, you can actually sell call options against that stock in order to earn a small premium. It's typically maybe a 1 to 2% return over a few months, but it can be a pretty big figure if it's an annualized figure. So if you look at the option chain for Activision Blizzard, typically I sell options that are the shortest duration. So right now we are in July, so I'm going to sell the July 19th options, which is going to be in about 20 days. And I'll usually sell options close to at the money right now. So stock's trading at about $48. So I would probably sell this option right here. You'd earn about 59 cents per share on that premium. So the covered call option strategy is a really good way to kind of juice up the returns of your portfolio while protecting the downside risk a little bit. I actually teach a course about covered call options for dividend investors. I'll put a link in the description below, so if you want to learn a little bit more about that, you can. It's just a strategy to sort of supplement your dividend income.